The inflation outlook is increasingly uncertain, and it is a reality that many of today's investors have not invested through a level of inflation uncertainty as we have today, which again warrants a period of caution, conservatism, and humility when thinking about the inflation outlook. We have to recognize that there are risks and therefore need to be very conservative in our portfolio construction. It's much better to look for mispricings and opportunities as the environment evolves rather than try to predict a particular modal outcome. Now, there are opportunities to capitalize on for those investors that have a view that inflation will be more persistent and more elevated than the market might be anticipating. One of those in particular would be inflation-protected bonds. Break-evens on inflation-protected bonds have increased quite dramatically in recent months, but that largely reflects the known news of the heightened levels of current inflation readings. As you look out the forward curve into inflation swaps and further out the inflation yield curve, there's actually quite a benign view on longer-term inflation. And again, for those that have a view that inflation may be more persistent and last longer than the market may be pricing, inflation-protected bonds may present one opportunity to hedge against inflation uncertainty right now. Another area that presents opportunity in our minds would be in yield curve positioning. You look at the yield curve 2 years forward, the yield curve is incredibly flat. And if inflation were to become a more persistent problem, one could envision that the yields on longer term securities might increase relative to shorter term fixed income securities. So both inflation protected bonds and positioning along the yield curve are two ways in which one could capitalize or potentially position for an increasingly uncertain inflation outlook. But again, would want to reinforce that this is an environment for pretty strong humility in terms of portfolio construction and recognizing what we know and what we don't know, and really looking for mispricings rather than try to anticipate the future.